All right, what's up, everybody? Welcome to what are we on? Day four. One, two, three, four. Yep, day four. So, welcome to day four of the $500 to $50,000 challenge. And this was not the way I wanted to end the week, but a very, very important lesson today. So, for one, I want to talk about what happened, right? So, I started off the week with a $500 account. Okay, $534.68. And then after one day, it was up to 675. After 2 days, it was up to 682. After 3 days, it was up to $876 on Thursday. And then Friday, it dipped back down to under below my initial investment, and now I'm sitting at $456.56. But a very important lesson. But number one, I want to talk about when you have stocks for long term. There's going to be times where it's rising consistently over time, but within that, there's going to be days where it dips down, or weeks where it pulls back. Sometimes even months where it pulls back, and you see your account go down, right? And say you are at 10K, but now you're sitting at 5K. But for me, this is a small account, and now I was at $876, and one day I lost $400 basically on a trade or trades, and it ruined my account, right? But very important lesson is I had terrible risk management, and I'm actually going to go over all the things that I did wrong, and it's just going to disgust me. But this is to hold me accountable and to show you what will happen if you don't have proper risk management, and also to show you what can happen if you do have great risk management and you can capitalize on things that you see. So we're going to go over to my 550K challenge and just show you what happened this week. So I started off the week very green. And then American Airlines, I took 10 contracts, which was not really, but actually that was not something I should have done, right? With proper risk management, I should have taken maybe 5 contracts, right? But nonetheless, I did cut my loss to 50%, and I lost 150. And then another losing trade, winning trade, and then 3 losing trades in a row. And then, if you can see the trend here, there's a stock I probably should not touch. But nonetheless, I did American Airlines, and I bet you they're gonna fly this week. And if you watch my video on day 3, I told you what SPY was gonna do, and it ran pretty much all day slowly. And I should have just took that play only. And I would have been green on the day and ultimately green on the week. But nonetheless, I lost 450, $520 on one trade, or not one trade, but on multiple trades in American Airlines. And unfortunately, these were my largest trades. And if I would have just again managed my risk, I should have took 5 contracts on all of these. And even if I would have took my 50% loss on this one instead of letting it run, I would still have been green plus about at least $100 on the week, right? But again, so I'm gonna go over the mistakes that I did on Friday, and own up to them. So number one, I traded based on the charts and emotion, right? I was revenge trading. I wanted to get my money back on American Airlines because I know this stock is going to run probably, but unfortunately, the market was green and the airlines and the cyclical stocks were down because big money, the institutional investors decided they would pull money out probably and put it into tech stocks, and tech stocks ran on Friday, right? But nonetheless, I think these stocks will come back and they're going to run. But eventually, what I did was I made a bad play. And it wasn't necessarily a terrible play because if we go to the chart, I'll show you why I took the trade. If we go to the chart here, American Airlines, we're gonna look at the daily chart. I was looking at the 15-minute chart, right? And this is Friday. When this red line right here starts to get close to the green line and it gets ready to cross, that means there's going to be a big move to the upside, right? And that's what I was seeing. And boom, so as soon as the market opened, I took that trade right away at 9:30. And we're going to get into my first mistake. You don't take a trade right at 9:30 unless you're closing out a contract from a swing trade. But I got into that trade literally right as the market opened. I didn't even give the market a chance to pick a direction, right? And so that was a rookie mistake all in itself. Is I literally did not give the market a chance to pick a direction. I popped in, I took a $25 strike. And we're gonna look on the 5-minute chart. I took a $25 strike, and the stock opened at 25.12. So I wanted an in the money contract, and I wanted this to run up to, you know, 25.50, $26. I thought there was gonna be a big move to the upside, but unfortunately, I was wrong. And on the other time frames, this, instead of this red line going closer, the red line was above the green line and it curled over, right? And when that happens, this is called a death cross, and the stock dropped, and it dropped fast, right? And this is what I was talking about. It's great to be on the put side because you can make very fast moves. So if I would have took a $25 put, in a matter of 30 minutes, I literally would have made 70 cents in the money. So I would have made $700 off of that $300 investment. So I would have doubled my money, 200% gain, right? But I took a $25 call because I was trading on emotion. And I only considered one thing. I only considered it going up. I didn't consider it going down. And that is my number one thing. So I trade on the chart and the emotion, right? So I was secretly revenge trading. And then number two, like I said, I wanted to only look at my scenario. I didn't think about, okay, it can go down. And I still, if I would have stair stepped, this is going to get me into my third one. I didn't have a desired entry. I didn't have an exit, and I didn't have a stop loss. Before you get in any trade, you should have those three things for if it goes wrong, right? So minimum, you should have a 50% stop loss. But I didn't have any of those things because I rushed into the trade. I was revenge trading. So I did everything that you should not do. I did wrong on that play, and I got burned, and that's what I deserve. And then number four, I didn't let the market pick a direction, right? When you're getting into a play, you should be looking at the 5-minute chart, the 3-minute chart, the 1-minute chart, and see what's happening with that stock, right? And as you can see on the minute chart, soon as the market opened, it went up 6 cents and dropped immediately hard, right? And then, yeah, so that's number four. I didn't have proper risk management, right? Really on a play, you should be risking 10 to 20% of your total account. So I should have really, like I said, only took about 5 contracts on that play. And then number 6, I didn't stair step into the play, right? I just took my 10 contracts and I was like, it's going up. Instead of taking maybe 2 or 3 or maybe 5 and then adding the 5 later. And that's what I get. Like I said, I got burned and I deserve it. And then the next thing I didn't get out at a 50% loss. This play moves so fast to the downside. I'm thinking, it's got to go back up. No, it does not have to go back up. So I didn't take a 50% loss. And like I said, if I would have took that 50% loss, that would have put me at $150 loss instead of $300. So that would have kept me green on the week, but I didn't do it, right? So I just, that play was all bad. And nonetheless, this is a learning video. So a great takeaway that I took from this was, again, I always say this, when moves happen to the downside, they happen much faster. So you can make a lot of money when a stock is selling off because everything falls much harder and much faster than they rise. right? So, and I'm going to show you the SPY chart. This was in 30 minutes. American Airlines went from $25.18 to a low of $24.25, right? So that's almost basically a dollar move in less than 30 minutes. So if you take 10 contracts at the top, that's basically $1,000 that you could have made. Minimum of $700 if you take a $25 strike from the opening price. So I'm going to show you what I knew was going to run that I didn't really want to touch because I hate how slow it moves sometimes. But again, that is the power of being patient. So SPY at the open, it opened at $420.75, and it moved up basically 75 cents within that first 30 minutes. And then it basically traded flat, but grinded up all day. So if I would have spent that same $300 on SPY, I could have got probably 2 contracts and I would have made, $200 by the end of the day because it grinded up all day long. And then I knew that's what it was going to do. But like I said, I made a bad play on American Airlines, revenge trading, and that's what I get. I got burned, and that's a lesson for me. But I'm not worried because this $400, I know the power of what just $100 can do, right? So like if I look at a recap of my week, this $72 went to $132, right? Made $66 on my investment on this one, and I should have made way more, but I took my profits. This SPY made $118 off $157. So that is the power of options. You can make a very great return on your money in a short amount of time, but you can also lose a great amount of money in a short amount of time. But that is why you must have proper risk management and not trade based on emotion, not do revenge trading like I did on Friday, because that one day and this one ticker, American Airlines, cost me a profitable week, right? I lost 450, 720, or no, sorry, $520 on one ticker, right? Because I was revenge trading. And that is something you don't want to do. And that's something I did, and I got burned. So I'm glad it happened because now I won't do it again. I got it on video so I can come back and watch these. But for this week, and funny, American Airlines, they just got news. So I'm actually expecting the airlines to run this week. Look at the bullish cross right here. This is what I'm talking about. The red line is rising above the green on the 5-minute chart. It was trading at $24.29. It's starting to rise up because of this news right here. American Airlines pounced as France reopens. So there's France is reopening, letting vaccinated people in. Obviously, there's going to be more flights, so they're going to be having more revenue. Investors like that, and American Airlines is rising, right? So the stocks for this week, I'm expecting a reversal on the on airlines. I'm expecting them to go up. I'm expecting SPY to do some sort of pullback because we just broke through the highs and we tested the highs. So now I'm expecting SPY to pull back a little bit by at least Wednesday and go test the lows of the $410 level and test the lows. And if it doesn't break through that, then we might go ahead and go back higher and make all-time highs again. That is what I'm expecting. I'm expecting a gap down. That is why I have a put for Monday expiration. And again, of course, I could be wrong. But that is what I predict. But again, I'm going to trade based on the charts, based on the behavior of what the stocks do. historically, and we're gonna have a profitable week. I'm gonna have a profitable day Monday, and we are gonna grow, and that's what it's about. So thanks for watching if you stayed for this long video. But again, everything is a learning experience. Things rise usually over time, nice and slow and steady, but they can fall hard and fall fast, and you can profit from those. And it's just about learning, growing, being consistent, being patient, and being willing to take a little bit of risk, but manage those risks properly. And if you do that in the long run, I promise you'll retire earlier. You'll be able to do a lot of things. And my goal is to just educate people about the market. Of course, I'm not a financial advisor. I'm just a person that has taken interest in finance, and based on what I've seen from people, the stock market is one of the fastest ways to grow your wealth and build wealth over time. This is what people do when they retire. They rely on the 401k, which is stocks, and index funds like SPY. And yeah, so if you have any questions, feel free to reach out. If you want me to help you set up a portfolio for long term, or if you want to learn about options, take a look at some of the videos. There is a course that will be coming out that's going to be very affordable. But this took over a year of me learning, growing, making mistakes, and I'm still going to continue to make mistakes. But if you can be even 50% right on your trades, you can be profitable and make a lot of money. You don't even need to be, 80%, right? Like if you take a look at my account, I took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades, and I won 2, 3, 4, 5, 7. So I was 7 out of 12 on my trades. And so that is a 58% win rate. If you take away this one loss and make this $150, which I should have done, or sorry, $160, that leaves me with a $140 profit for my starting balance of 534 plus 140. So I would have made so I would have made $140. So $140 divided by 5, that's $28 a day. And that's not much, but on a $500 account, that's a decent amount. And just imagine if you had a $5,000 or $10,000 account. These will add up very fast, and over time, if you could do that and at least be 50% right and keep your losses slim with a minimum 50% premium, you can be very profitable, and you can retire earlier, and you can go travel and do whatever, give to charity, do whatever you like. But that's all I got. Stay tuned for my updates this week, and God bless you and good luck.